Okay, everyone, welcome back to our news trading session. And obviously, we're doing our theory and practice. I've updated the slide for 2025, so some new materials here to talk about some changes here and there. But yeah, let me know if audio is coming through. Okay. All right. Now, first of all, I do apologize. I am still having issues with my cameras for this week. So we are going to go ahead without having to look at my face. Maybe say a refresher, something refreshing for you guys. Probably bored looking at my face here. But yeah, we are going to cover a lot, especially with what's really going on in the market at this point in time. And we'll begin with our news trading session, theory and practice, and also if you have any questions regarding the fundamentals, right, or any news that's really ongoing in the market, because we have been, kind of been flooded by a lot of news every single day, literally every single hour. It's a ticking time bomb at this point in time with Trump right now. So the moment he wakes up until the moment before he goes to bed, he might tweet something stupid that could actually, move the market a lot, right? And we are going to be getting a lot of news today. Possible U.S. and U.K. deals announcements. I don't know if I want to call them a deal. Probably, some kind of framework to agree with at this point in time. But yeah, a lot of stuff happening. Obviously, the development with China as well, and U.S. China is having a meeting over the weekend. If you don't know that, they're actually having a meeting in Switzerland over the weekend. All right, let's get this started with a quick disclaimer, and we have a new improved disclaimer, very short, like that. Leverage trading involves risks, and so you need to trade responsibly. Obviously, regional restrictions apply, so your terms and conditions might differ. So make sure you do check on those. And all of this that we are going to be doing tonight, it's for educational purposes only. It's not a financial advice. And again, past performance is not going to be indicative of future results. So, just keep that in mind. All right. Okay, as per usual, there should be bonuses for participants. I'm going to show you the code TW deposit bonus. So make sure you use the code, download the code, write it down somewhere just in case you need it. When you deposit into your Octa trading accounts, use the code to get your double deposit bonus. And you should have access to the private Telegram channel as well if you registered through emails or if you have attended our previous sessions before. Okay? All right. So this is the code. It's NOFARM 2025. So make sure you use the code and just jot it down. It's valid until the 31st of December 2025. So, never know when you want to need it. And I'm pretty sure this is a one-time use code, but, just to make sure, please ask customer service. I think that's part of the reason why, Octa does provide a lot of these promo codes that you can probably save it down and write it down just for future references. All right, a little bit about myself. And I'll finally get the time to update it. So just give you guys a little bit of a context on who I am. So my name is Vida Njodo. I'm basically a global macro strategist. I'm also an institutional market analyst, and my specialty is with the Ichimoku Kinko Hill, and I am an Ichimoku specialist, and that's basically the specialty that I took when I do my technical analysis certification and whatnot. I have over 20 years of professional trading experience across Forex indices, commodities, and futures. Except crypto, I don't do crypto, so I think a lot of people still ask me, hey, crypto this, crypto that. I'll take a look at it, but personally, I don't invest myself in crypto. Not really connected into the whole crypto world at this point in time. All right. I'm also the former head technical analyst at GFT Markets, now Gain Capital, part of Gain Capital right now, working alongside Kathy Lien and Boris Schlossberg. If you are old enough to know who they are, they're actually still around. If you watch CNBC and whatnot, I think they still do come on board and gave commentaries into the market, especially in the Forex market. Also the ex-head strategist for Invest in Japan, designing structured macro playbooks and technical FX strategies for Asia's advanced brokerage environment. I also manage multi-account family office trading portfolios with over 20 million AUM, just in case, because I think there's a lot of people are just wondering, what kind of money are you dealing with? I don't do copy trades. I don't do retail, asking for funds and whatnot. So if anyone approaches you claiming that was me asking for funds and, whatever not, it's a scam. I don't do retails, right? And yeah, um, I would call myself an Ichimoku Kinko Hyo authority because I do spread Ichimoku Kinko Hyo across Australia there. So yeah, basically, I do merge a lot of the stuff. I do merge Ichimoku Kinko Hyo with smart money concepts and institutional order flow, all of which these materials are actually, we have already published a lot of these materials as well. So if you want to learn about it, yeah, feel free. I'm also a panelist at Investor in Singapore, presenting with financial heavyweights Roger Montgomery. If you guys if you guys are stock investing, you probably have come across a book called Value Investors, Value Investing. Yeah, that was written by Roger, and also with Mike. If you look up who Mike Bellafiore is, he runs a hedge fund called SMB Capital in New York. All right, I'm also a regular market guest on BBC UK, Channel News Asia, CNBC, as well as Bloomberg, offering macroeconomic insights and technical analysis to global audiences as well. And I've been a trading coach since 2007, and I've helped a lot of traders from beginners to proprietary desk level. So I do mainly train a lot of institutional traders myself. All right, so that's a little bit about myself. Finally, you guys get a good look of understanding of what I've been doing in the past 20 plus years of my career. But yeah, there we go. All right, let's move on to explaining the advantages and disadvantages of news trading. I made a couple of changes as well. Let's take a look at the advantages first, and we're looking at high volatility, high reward scenario here. So major news releases often cause strong price movements and creating multiple trading opportunities. If you guys missed what happened last night with the FOMC interest rate decision, it does create a lot of movement, and Trump actually did something sneaky as well. There was actually a leaked document that was actually published by Bloomberg at about the same time Jerome Powell was doing his press conference that he's taking away those, export restrictions for AI chips or any GPUs and whatnot. So gave a huge boost to Nvidia. Nvidia jumped 3% last night, and I'm pretty sure when the market opens tonight, it will actually jump higher. And yeah, it will take the index with it as well, because of the weighting itself. So yeah, high volatility, high reward. This is where we want to be swimming as a trader, and obviously intraday traders, we need this kind of volatility. Otherwise, it's really hard for us to actually trade without this high volatility. It is also time efficient. When we come to news trading, trades are very often short-lived. You want to know how short-lived it is? In our sessions, I think we did it for 3 years right now. If I'm counting it right, we did 3 years of live trading sessions. And the record that we have was 54 seconds. That's how long we hold the trades for. A lot of the huge funds actually hold it, no more than 6 to 10 minutes on average. So it is actually very short-lived. It's very time efficient. With setup formings, resolving quickly after the news. Don't have to really stare at it for the whole day. Clear timings, well, you know exactly when the release happens, all these economic calendars that you have out there. I use trading economics, if you guys are wondering what I use, because there's a lot more information there. But I think a lot of veteran Forex traders probably use Forex Factory and whatnot. If you want to go, you can actually go to Octa's website, and they actually have a news calendar as well in there. But yeah. So it's actually very easy. I know when the news is actually going to be released. I can prepare what I need to look at. Just preparing the market structure just before that news breakout as well. All right. The other thing is we have directional conviction, right? So news often aligns with market consensus, and this reduces indecision in trend direction as well. Typically with news trading. Depending on the context, but most of the time, if the news are like, yeah, wow, this is what everyone is wanting, the market will just go in one direction really quickly, and then it's kind of really hard for it to kind of turn around. If White House doesn't leak some of that documents yesterday to Bloomberg, pretty sure we would actually have a lot of downside pressure on the U.S. stock market as well as on the risk sentiment yesterday. But with the whole Nvidia thing, and then it was announced about 6 p.m., 5 p.m., 6 p.m. New York time, early Asian morning. Jensen Huang came up and say, "Hey, yeah, it's happening. I'm not gonna get fined. I don't have to get tariff. I don't have to pay license. I can just ship it to China and whatnot with no restrictions whatsoever." All right. The other good thing with news trading is it works with both technical and fundamental strategies. And a lot of you guys are obviously coming from a technical background. You guys are all, I'm pretty sure a lot of you guys are not fundamentalists, a little bit of a both at this point in time, because I do have to look at the whole macro situation as well as, trading via technical analysis. But yeah, you can easily combine smart money concepts, supply and demand, simple trendline setup. It's very simple, right? Those are the advantages that we have when it comes to news trading. Super, super simple. All right. Let's talk about its advantages here. We got unpredictable spikes. Yeah, it happens, right? And then we get slippage, and then spreads can widen, dramatically during high impact news. And one of the main reasons of that is because a lot of traders are trying to get in and out at around those news releases, right? Maybe position adjustment and whatnot. We just don't have liquidity dry up, and that's basically what's causing the slippage and the spreads widening up as well. So you just be very careful. There are risks involved, right? The other thing is also it requires precision as well. So entering even a few seconds too early or too late, it results in very poor fills or probably invalid signals. I don't really like trading pre-news. Causes a lot of headache sometimes, right? Because if we get the news that's not as the market expected or not something that we want, you can actually kind of flip-flop really quickly as well. The other thing that we do is straddling the market. And unfortunately, ever since the circus rolled into town, Trump as the head clown, we get a lot of whipsaw in the market, and unfortunately, that's basically what happens, right? So, it was actually very hard for us to kind of straddle the market. Usually, it's kind of easier that we can actually straddle the market. But with the whipsaw or risk that we have right now, or sometimes even the market doesn't move because all this economic news are what we call stale news. They're outdated news at this point in time because there's all Q1, and then the whole tariff issue is now part of the numbers for Q2. So we basically have to wait for 3 months. I'm not the only one. Even JP and the whole Fed governors, the FOMC, if you take a look at the press conference last night with the FOMC, Jerome Powell was there, dumbfounded pretty much. Like a lot of the analysts were just asking him, so what are you going to do, right? Are you going to be cutting rates? Are you going to be cutting a lot of rates? Are you not going to be cutting rates? It doesn't matter because they don't know what's going to happen. We don't know if the tariff is actually a bluff or is it going to kick it into effect. We have no clue what Trump wants to do, and because no clue on what Trump wants to do, and obviously it has an impact, but it just hasn't materialized. The FOMC is saying they want hard data. Right now we have soft data. Soft data is not data that we can actually use, and that's not something that the FOMC is going to be using. FOMC needs the hard data. So they need to be looking at the April number, May number, June number. Obviously we got Q1 numbers last week. That was, we talked about it in the outlook. It was a little bit distorted because a lot of importers were just importing a lot of stocks before tariff rolls in. So I don't know what's going to happen, right? Shipment might stop. We might get a trade surplus. That could skew the quarterly GDP for Q2. But again, we don't know what the impact is. Impact on inflation. We don't know what it is at this point in time either. The FOMC have no clue how the tariff is going to impact inflation as well, right? Is it going to create a supply chain disruption? If it does, is that going to push prices up? The only good thing that we have here is that oil prices are down. That's the only good thing that we have at this point in time. That's probably the only reason why the FOMC is probably saying, you know what, we'll just wait and see, because it might go up, it might not go up in terms of inflation. All right. The other thing is basically what we have been getting since April. Unfortunately, that was basically what we got in April, right? No reaction, no trade. Big news that pops up. We got the CPI, we got the NFE. It was struck off by the market entirely because everyone was just focused on tariff at this point in time. And all these numbers, again, they're old numbers. They're all irrelevant numbers at this point in time. The market shrugged it off. We saw nothing. We got nothing. We experienced zero trade. That was last month. Zero trade. I don't believe it. I don't think that ever happened. But yeah, it was zero trade last month, and pretty crazy. It was pretty stupid as well, to a certain degree. All right. The other thing is, it's not beginner friendly. Unfortunately, right? A lot of people say it's beginner friendly. It's actually not. And for new traders, you can do it, right? But if it's your first time ever, just don't do it, right? Learn how the market move. Attend maybe 1 or 2 of our live trading sessions before you even try doing it with your real accounts. If you want to do it on your demo accounts, it's completely fine. But just keep in mind, it's not beginner friendly. I'll just be honest with you. You know why? Because it requires experience, and new traders just don't have the experience. 20 odd years with me, trading. I still find it hard to difficult. I find it hard to trade the news sometimes because market sentiment it's a completely different animal. It's just, it might do something that's actually unpredictable, something that probably doesn't click, probably doesn't make sense, right? Let me give you an example, very simple. FOMC last night, super hawkish. You know why I say super hawkish? And remember on the outlook, I said I guarantee 1,000% they're not going to be cutting interest rates. We're not dumb. We know what the FOMC is looking at. And FOMC was super hawkish because there was actually a question to us. Are you going to be cutting rates in 2025 as per plan? 2 rate cuts. You know what he said? Jerome Powell basically said, you know what? We might not have the chance to cut in 2025. Maybe it's 2026. We don't know. We might get 1 cut. But you see, that's basically the same thing that I was saying the whole, 2 months, 3 months, whatever. Market is getting it wrong. Market is pricing it wrong. Right? If you understand the fundamentals, it's impossible for the FOMC to cut rates aggressively unless the hard data, i.e. the final unemployment rate in the next 3 months, kind of shifted a lot. But then, obviously, that's through experience. If people don't understand what's going on, they look at that and say, hey, the FOMC was hawkish. Let's sell the US dollar, let's sell the stock market. Obviously, that's going to kill your account yesterday, right? The other thing is speed, okay? And obviously the volatility, and then discipline. What if you get it wrong? Are you able to say, I get it wrong, I need to close it out? Sometimes traders just can't do it, right? It's a mental thing, and it takes experience, it takes time, But yeah, that's that. So those are the advantages and disadvantages of niche trading. All right, I want to talk about type of market moving events, right? Obviously, we got 2 things here. We got the hot unexpected news. These are unplanned events that often causes sharp market reactions. They can be terrorist attack, military conflicts. Right now, you guys, I think some of you guys are probably watching this in India, or maybe even some in Pakistan. But hope you guys are doing well there, and hopefully things gets resolved there really quickly. But yeah, you know what's going on with India and Pakistan at this point in time. There's a little bit of a military conflict going on right now. But then we got Ukraine, Russia, and then we still have the Middle East with Israel and Gaza as well. A lot of stuff going on in the past 3 years, right? A lot of stuff happening here. All right. So the impact to this is that investors are, if you see these kind of things, investors are basically going to flee risk assets, right? What are risk assets? We talk about stocks. We talk about indices, which is an index of stocks, right? And then they're going to be moving to safer ones. What are we talking about? Safer ones are basically treasury, gold, bonds. People move to gold. That's why you see the rally in gold so far, right? In the past 3 years, a lot of stuff happening. Major currencies like the dollar, the Japanese yen. But yeah, And then we have safe haven currency strengthening as well. If this kind of news happen, we got the Swiss franc strengthening, dollar sometimes strengthen. Obviously, the last month the problem was with the dollar and the bond market, so we didn't see that safe haven flow there. But we saw that safe haven flow go to Swiss and the Japanese yen. Okay. All right. The other thing is that we got scheduled periodic news. This is what we're watching out for, right? These are regularly published news. Published economic indicators, central bank communications like last night, central bank meetings like last night, interest rate decisions just like the FOMC, and Bank of England just now cutting 25 basis points as per expected, right? And then we got your inflation indicators, right? CPI, PPI, your core inflation. Quarterly GDP reports. This is what we looked at last week. Very important, obviously. And then we focus on the employment numbers. Last week, employment numbers was good. Unemployment rate didn't go up. It was flat. Non-farm payrolls, huge gain. We got downward revision. It was overall still a good gain from the market. So yeah. And then we got business activities. We got the ISM. We got the PMI, services and manufacturing numbers, right? These releases often set directional bias in the Forex market, equity, commodity markets based on how they compare to the forecast. So you need to understand the context, and that's why we encourage that you guys join this series session of this. You understand what we're talking about during the CPI live trade or the NFE live trade. By the way, the CPI live trade, if you guys want to know when that is, that's next week on the 13th, right? It's not this week. CPI is actually going to be on next week. Okay, now let's talk about the most profitable news events to trade. Let's talk about CPI inflation numbers. That's next week. Why is it very profitable? Because it drives central bank rate decisions. It drives them to make that decision based on the inflation number, right? Typical market reaction to this is that we are typically looking at a strong dollar reaction, impacts on gold and the FX as well. Whether it's actually going to be, negative or positive, the dollar is going to react very strongly to it. So this is one of the reasons why we're looking into that as well. The NFP number, the job reports number, this trigger volatility across all USD pairs. Even the Dow Jones Industrial Average affected, Nasdaq affected, the S&P 500 affected, gold definitely affected, FX are going to spike here and there. FOMC rate decision. Take a look at last night if if you don't believe what's going on, take a look at the release yesterday and look at how crazy the market moved, right? So we got a lot of dollar volatility yesterday, and then we got the equity market and the bond whipsawing up and down, before the release, during the release, and throughout the press conference. And then Trump, all right, happens. Obviously, it causes a lot of crazy movements in the market, GDP reports, very important because it reflects the overall economic health. We got negative 0.3 on the U.S. economic GDP last month for the first quarter. But yeah, for the breakdown, we're looking at a little bit of an extraordinary case there. It was a little bit of a skewed case there where the import numbers was really high, so that causes that deficit there. Obviously we do look at currency valuation adjustment as well. Those numbers happen and we start looking at it. How is it going to impact all the other countries out there? How is it going to impact the US, right? PMI ISM indices, forward-looking view of growth conditions. If manufacturing not improving, then we know, things are just going to slow down for the GDP numbers because they're just not manufacturing enough. Not manufacturing enough directly reflects the demand of consumers. So that's something that we need to talk about as well. April Fool is real. Yeah, April, I think overall April is still a good month. We got a good volatility. I think it was a great month. If you know what you're doing, I think it was a super great month. If you don't know what you're doing, you probably blow up your account once or twice last month. And that's unfortunately the case there, And that's why we do have that Telegram channel. If you join in, you get a little bit of an information, bits and pieces here and there, just get yourself updated. And then what's really important, watch the Outlook video on Mondays. I'm not getting a lot of people watching that Outlook videos. I saw the numbers. I know there's a lot more of you guys out there. What's so hard about spending 20 minutes, 30 minutes just, listening to what to look out for throughout the whole week, All right. So, This scheduled events tend to offer consistent volatility and opportunity. So it's very consistent volatility and a lot of opportunity. If you know what you're looking out for, it's a huge opportunity there. So you want to combine scheduled news anticipation with technical confluences, for high probability setups, right? When that happens, that's your cue. Simple as that. All right, I want to talk a little bit about the phases in the market first, and this, I think you should watch the smart money concept here because it really ties in directly into that as well. So basically, what we look at in the market, I know you look at this and say, "Oh, yeah, it's a ranging market and a trending market." Simple as that. No, it's not. When a ranging market happens, it's actually accumulation. This is where people has a lot of information. People that figures out what is actually really going on. They start accumulating positions before any breakout happens, right? And then you go your participation phase. These are reactionary. These are your technical traders. They'll be doing this, right? And then you got your distribution phase. Distribution phase is basically where the smart money is actually getting out. Participation phases are starting to see a lot of profits, and this is where people that are uninformed starts coming into the market. Those uninformed traders are coming in late, right? They're looking at, for example, you wake up and look at the news here and say, "Oh, gold's rallying up. Look at gold crashing like crazy today." Those are old news. But people that didn't know, they woke up, they buy, and then they get taken out today because the market reverses because they don't know what's going on. They're reacting on news yesterday that gold was recovering because everyone was unsure about economic growth. Don't know what's going on with the Fed and whatnot. Yeah. So yeah, that's basically what happens, right? So this is very important. All right. So let me give you a little bit of a general general rule for news trading. So before the news happen, you need to study the market context and understand the dynamics of the currency pair that you want to plan to. We cover this every session, every live trading session that I do. I give you the context on whether or not this numbers are going to be important. How is it going to react? What are the market looking out for? And stuff like that, right? And you should also be able to review past reactions to similar news releases to kind of identify those behavioral patterns, because the NFP by itself, if you pay closer attention to it, 9 out of 10 it'll go in one direction, reverse, and then take out both sides, and it'll go in the initial direction of the burst there. So that's basically, we're looking at patterns there. So we do have patterns, right? Just give me a second. Any bullish confirmation here? What do we get? All right. Okay. Good. No worries at all. Okay, so yeah, we got patterns. News trading, there are patterns out there. Review what happened in the past, and there's a lot of patterns, right? The CPI numbers, a lot of limit orders are taken out. Very simple as that. You also need to mark key support and resistance levels on your chart to anticipate breakout or reversal zones, right? And you also need to define your strategy, obviously. Are you going to be trading the news spike? Are you going to be fading the reaction? With the NFP, there's something that we say, yeah, we'll wait and then see if the market pulls back after the initial spike, and we'll trade that. That's fading. It's really up to you. Are you going to be like confirmation trade? Is it going to be contrarian trade? A lot of stuff there. So make sure you define your strategy. What do you want to do, right? You can't just jump into my trading session and say, I'll just follow this guy blindly and it's going to be okay. No. Sometimes we're successful. Sometimes, bad things happen. You got to figure it out for yourself. All right. The other thing is execution plan. Very important, right? Set a trading time frame. Are you going to be scalping the market? Is it going to be like 1 minute, 5 minute trades there? Are you going to be doing it like intraday, 15, 30 minutes? Or is it going to be a swing? Is it going to be like an hour, 4-hour chart that you're looking at for confirmations and stuff like that? So you got to set this stuff, right? So you make sure your execution is done. Your execution is done on the correct time frame, on the correct analysis there, okay? You also need to control your risk. You make sure that whatever you do, and let me give you a key pointer to be a successful trader, is consistency, right? You have to figure out your maximum acceptable losses for that one trade, and then you got to apply the proper positioning onto that trade. You don't gamble especially not on news trading. You don't go all in. You know, trading is not gambling. You want to gamble, go find something else to do, right? So, you know, we're doing this for traders. If you want to learn, you really want to make this a career, trade properly. But if you think that you're going to make easy money out of this by gambling, I'm going to go all in one position, bet all my life savings on it, please don't. That's just plain dumb, and this is not the place for it. Stop giving traders a bad name. If you want to gamble, go gamble somewhere else, and then tell people that you are gambling, not trading. Okay, please say that. Don't call yourself a trader with a gambling mentality. Don't give traders a bad name. Okay, you got to use your stop loss. You got to use your trading stops. These are going to be your protection for high volatility conditions. If the market is running up really quickly and you want to stay in that trend or whatever, you got to make sure that you are able to trail it. Make sure that it is trending, and if it is trending, stay in the trend. But you got to trail it. You got to protect your position, right? Move it to break even. You got to lock in some profits as the market moves and whatnot. So make sure the platform comes with a trading stop loss. I don't see a lot of people talk about trading stop loss nowadays anyway. All right. Decide on that trade. Is it going to be a short-term trade? Are you going to stay in for 1 minute or 50 minutes at top? This is basically what I do, right? Every live trading sessions that I do, I try to stay in only for 50 minutes tops, Unless I'm forced to stay beyond 50 minutes, I try to clear my position within the first 50 minutes. Simple as that. Right? You want to hold it post news, completely up to you. You think like, oh, this is going to be like a huge fundamental shift, then yeah, hold it long term, But you have to understand what's your goal. You can't open a position and then decide on the spot like, oh, you know what? Oh, this is running great. I don't want to take my profit now. I intend to stay for 1 minute. It's still going up right now. I'm just going to change this. That's all going to end up in failure. If you think you want to stay just for like 1 minute, 50 minutes, get out and be done with it, close up shop, please do that. All right. Okay, so I do make some note here because I think a lot of people was actually confused with all this, pending orders. So I just want to clarify the pending orders here, and some practical tips for traders. So let's talk about buy stop first. When do you use buy stop, right? You use the buy stop when you expect price to break above resistance and continue rising. Simple as that. You use the buy stop. And the strategic intent here is that you want to enter on a momentum breakout, which is a trend continuation. So giving you an example, if your price breaks above 1.1, just 1.1, right, for euro, you buy at 1.015 expecting further upside. Simple as that, right? That's a buy stop. Simple. Very easy to understand. It's not hard at all. All right. The other thing is what we call the sell stop. Obviously, this is the opposite, right? So if you expect price to break below support and then continue falling, use the sell stop. That's your use case scenario. What's your strategic intent here is that you want to enter on the downside breakout, which is a trend continuation to the downside. So if price breaks below 1.092, you want to sell at 1.0915, right? Below those price, then you trade that breakout. So sell stop and buy stop, instead of looking at it and say, but it's telling me to stop, it's not, right? It's basically a trend continuation pending order. So make sure you use this correctly. All right. And then we have the sell limit here and the buy limit. So what's the sell limit? The use case here is that if you expect price to retrace upward into a resistance and then reverse, you place your sell limit above the market price, okay? Now, the intention here is that you want to catch that pullback, right? Market pulling back up before that downward move. That's when you use the sell limit. Simple as that. Now the buy limit here is that when you expect price to pull back into support and then bounce upward, you want to enter at a discount during retracement. So go watch that SMC video. We talk about the premium and discount level there, right? So if you're thinking like, hey, the market is likely gonna go down a little bit lower, I still want to go long, right? But I want to go lower a little bit. So I want to place my limit. I want to buy near the support zone, near the discount zone, or whatever, right? Near the order block at the bottom there, near the fair value get below, all that stuff. So as price is going to be falling towards your support, you want to place a buy limit near that support zone. That's the limit order, okay? So the pro tip here is actually very simple. Stops means breakout continuation. Limit means you're looking for a reversal or a bounce. And that's basically it. These are the four pending orders that we are looking at. All right, let's talk about the buy side and sell side strategy. This is what we call the straddle here. One of the important criteria for a straddle here is that it requires a corridor volatility, i.e. it requires an accumulation phase. If you don't see that accumulation phase, you're not able to straddle the market, and it's best not to use this strategy, okay? So this is not like, oh, you got this strategy, and I can just create a buy, sell below the range or whatever, not. What if the market is not ranging? What if the market is trending? This strategy is useless. This is a strategy that's only applicable if the market is in a range-bound market condition. If the market is not in a range-bound market condition, it's not moving in a sideways market condition, please do not use the strategy. It's going to kill your account. Simple as that. This strategy is not for a trending market. Just make sure. All right, so what happened here is that we got a corridor of volatility. We got a range there. What we want to do is we want to wait for a breakout. It's just that I don't know if the breakout is going to be at the top or is it going to be at the bottom, because it's going to react to news, right? I don't know what the sentiment is. I don't know how people are going to react to negative news or maybe news that are above consensus. We just don't know. But if you see a corridor of volatility, there's a structure like this, there's an accumulation phase like this before the market, breaks out, then yeah, you can cage the market. Simple as that. You can create a buy stop up top, sell stop below. Just in case if it breaks to the upside, then you'll be in a good position. You'll be with the market. And that's basically what we have here, right? The buy trade happens because the buy stop was triggered, and immediately you have to cancel the other order. You can't have two. Remember, we talked about whipsaws. We got whipsaw before in the market, right? Because like within less than 1 minute, the market hits up and then down. You got whipsaw. So as quickly as you can, if one order is triggered, you got to close the other order. Otherwise, it's going to open both orders, and then you're going to be negatively hedged between the two stop distances. But yeah, you can see what happens here. Market breaks to the upside, it just starts rallying up. You order get filled at a buy trade, and the market starts rallying up. You got a good, profit there. It's like super easy profit there within a minute. Like if we're talking about this, right? But once that happens, then you start moving your stop loss to break even. This is what I would suggest to everyone there. You know why? Because sometimes it reverses. But when it reverses, your position is at neutral. You're not losing, right? It's at break even. So it's easy. And that's how you manage your risk. And then if the market continues to go up, you got your take profit target, obviously. Some people stay with the take profit target. But if you're a trend trader and you know very well who you are as a trend trader, people that has been following my analysis and whatnot for the past, it's been 5 years. If you don't believe me, I've been with Octa for 5 years at this point in time. It's actually 4.5 years. It's crazy. It'll be 5 years in 3 months. We started in 2020, back during COVID. It's crazy. But if you guys have been following my stuff, for the past 5 years, you understand that I actually do swing trade a lot. And I go with the trend as far as I can, right? So if you're given that opportunity, that's when you start using your trading stop losses. So every time the market moves up, you can start adjusting your stop losses. Trading stop loss, when we talk about trading stop loss, it's not automatic trading stop loss. It's not like every 10 pips it moves your stop loss. I don't do that, but every time the market goes out, create a little bit of a swing, didn't do a change of character, and then it does a break of structure. The moment it does a break of structure, I move my stop loss to the new swing. That's how I lock in the profits all the way up to the end, towards all the, to the end of that trend itself. And that's basically what we do, simple as that. Okay. So let's do a little bit of a practice, and let me just load up the chart here. I don't think we have a lot of range bound market condition here. But yeah, we can take a look at, and this is not a market condition, right? This, you're not, we're obviously not blind here that this is currently trading in a channel like that. We don't do that. The euro at this point in time. Oh, give me 1 second here. I got a ding. I have to open a position. All right. A lot of gold buy signals, just giving you guys a little bit of an info out there. If you guys are listening, tuning in, people, I think someone's already asking about gold. We're going long on gold, but unfortunately, we're not trading live the market at this point in time. Let's take a look at gold here. Gold. If you didn't see what's going on here, there was actually a little bit of a corridor of volatility developing on gold. If you don't believe me, it was this. We've been waiting for this for quite a while. About 5 hours I've been waiting for this. We finally break out. So, if you had that buy stop and sell stop, the market just broke to the upside there, This is an example of a potential buy stop and sell stop that we're looking at. Okay, so if you guys missed out, oh no, what am I supposed to do here? If you're long gold right now and you just want to stay in for a little bit, please get out if you want to. But hey, gold, long run, this is doing great. I don't have a problem with this. All right, we talk about news, right? We got news yesterday. Remember, we got that. We got the FOMC interest rate decision. Look what happened here. What happened with gold here was that it broke to the upside, and then it whipsawed. It just crashes to the downside. So this is the risk that we're talking about when it comes to news trading itself. All right, we don't have any corridor of volatility, unfortunately, at this point in time. There's a little bit on daily if you want to, but I wouldn't account for this. This is not for you guys, right? I know a lot of you guys are probably not going to be looking at beyond hourly at this point in time. It's going to be useless. I'll try to find an example in the market, see if we can actually see a little bit of corridor of volatility developing in the market. I just don't see anything at this point in time. The Dow Jones and Nasdaq's probably a little bit of a corridor of volatility developing. Oh no, Dow Jones just lost it. Yeah, probably. No, Bitcoin lost it as well. Let's check out Bitcoin, see if there's any no, there's no corridor of volatility on Bitcoin as well. So things happen, right? Sometimes I'm just not able to find that corridor of volatility and not able to give you a good example on the market here. But yeah. But let's take a look at a couple of scenarios here, because if you take a look at the sterling here, we got a little bit of corridor of volatility here developing here. So if you had created a buy stop up top here, and it would just take you out, as simple as that. But you need to get out, because then the market kind of just reverses down and starts bouncing back up again. On a small time frame, there was actually a little bit of a corridor of volatility before the breakout happens just now during the interest rate decision. But that corridor of volatility, the smaller the time frame is, the less accurate it is, right? If you take a look at that corridor of volatility, that's basically the Asian range there, and you can see the whipsaw that happens. It takes you out and it kind of flips to the other side. So there are techniques, especially around news like this. We work differently. Interest rate decisions are not something to be trifled with. But yeah, just in case, right? We are looking at the Euro USD right now. This is on the 5-minute time frame, and you might look at that and say, hey, I think there's a little bit of resistance up there. Right, sure. So you can create a buy stop. If you think that resistance is going to be taken out, then yeah, you can create a buy stop up top there. You can move it up there, right? So you got your buy stop there. So simple as that. And if you think that, oh, this is actually breakout happens, and then you'll be good. So that's the purpose of the buy stop and the sell stop in the market, right? All right. So the other thing is what we call the buy limit and the sell limit strategy. And let me just pause here for a little bit. If you don't understand technicals, it's going to be impossible for you to use the sell limit strategy. You know what's really impossible? Right now, if you don't understand price action analysis, forget about it. You're not going to be able to use this. Because if you don't understand how to find that liquidity zone, if you don't understand how to find an order block, you don't understand what the demand is, you don't understand what the premium level is, the discount level is, the imbalances in the market, this is useless, right? But, just for example's sake, I'll teach you how it is. But let's just take a look at an example's sake here, right? Take a look at this one here. We got a local previous high. We're looking at that as a potential resistance. Market was down there. The idea here is that, oh, I want to sell because I think, in the long run, this is on the euro again. In the long run, I think the euro is going to go down, right? But I don't want to sell now because maybe I got my sell signal right now from my indicators, but I think the market is going to pull back. I might get a better price up there. If I sell up top, obviously that's going to be much better, right? Because it will position myself very close to that resistance and very close to a stop loss. Look at the risk reward ratio if you use the limit strategy well. It's crazy as hell, right? It's crazy as hell, right? You get 1 to 2, 1 to 3, 1 to 4. At this example is probably giving you a 1 to 10 risk reward ratio here. Reason being is you're so close to that resistance and support area that there's a lot of clustered over there. That's going to be a strong level that the market is very hard to break. An example here is that 1.34 on the sterling. We actually did a live trading session this week. Unfortunately, it was in Bahasa, Indonesia on Tuesday. But if you want to watch the recording, yeah, you can. We were looking at 1.34. We were not at 1.34 during the live trade. But I would say to everyone that attended the live trade, and I think everyone that attended the live trade, some of you guys are here. Please post it. Are you profitable? Because the market gave you that 100 pip trade based on that. We use a limit strategy on those. We're looking at a resistance likely to fail, and that's where we use the limit strategy, right? All right. Bayu is commenting. I know you make a lot of money out of that, right? Well, what do you get? 70 pips at least. But yeah, that was. If you understand what's going on in the market, you understand the technicals, you understand where to look at, all these resistances. That's when you use the buy limit and sell limit strategy. As simple as that. So this is an example. We look at that level, market just hit there, spike, comes back down. Simple as that. Market just drops down like a stone. Let me give you an example. I can give you an example here on the selling here, and it's actually very easy. Right? We were looking at 1.34. We were looking at this. We were looking at this yesterday, right? 1.34. And take a look at what happened here. If you have that sell limit at 1.34, exactly at 1.34, right? Doesn't matter what it is. You see that liquidity grab that happens at 1.34, market just slides down. This is on the hourly time frame. You want to see what it is on a 15-minute time frame? Let me zoom out. Show you what it is on a 15-minute time frame. Look at the liquidity grab. It just grabs it and then goes down. You want to go on a small time frame. You take a look at the liquidity grab that happens at that particular point level. It was just right there. See? One spike, market grabs it, smash it down, right? Simple as that. Why are we looking at this? Why is it so important? Why, was there something up top? Yeah, because if you watch the outlook, this is something that we already talked about. We had a huge order block from last year. That was the September 2024 high. That wasn't broken. That was at 1.34. Psychological price level, 1.34. Rejection at 1.34 means there's actually a pattern forming this week on the daily time frame, which is a head and shoulder pattern. So this is when you use the limit strategy. You set your limit strategy here. You try to sell it to get a huge profit. Right? Because if you take a look at the hourly time frame, look at where we sold it. If you sold it at 1.34 exactly, right? And let me just delete this. I'll show you that where that 1.34 is again, right? So we got 1.34, which is here, right? Was it here? Is this on a sterling? Is that 1.34? Yeah, it was 1.34. You set your sell limit there. Where's your stop loss going to be? How far is your stop loss going to be? Like your maximum stop loss is probably going to be out there. What's your target? A lot of people was looking at 1.3, 1.33. People got more than 1.33, right? The whole drop all the way down today where it kind of bounces off. At the very end, it was actually 1.3240. So that was a guarantee 160 pips on the sterling in one night. This is how powerful the limit strategy is if you understand what it is. But unfortunately, if you don't understand what it is, you're not going to be able to use it. So a lot of our sessions, we do provide a lot of education, right? So you can actually use that for niche trading as well, and you use that post news. You don't do it during the news, but you do that post news. The limit orders are supposed to be post news, right? Trading after news releases. All right. So let's do a quick test. This is a new quiz, right? This is a new quiz. You don't see this. All right, I got 4 questions. The number 1. What happens if you get a surprise rate hike from the Fed last night? What assets are likely to spike? Tell me. And what would you do? What would you avoid trading? You know, what assets are you going to be looking at? And what assets are you not going to be trading? Which one are you going to be avoiding? Which one are you going to be trading? You know. So that's question number 1. If someone can give me the answer to that, that would be great. You know. Hopefully someone's going to give me an answer because this is new questions. It's not new. Come on, guys. You know, I changed things up a little bit for you guys here. All right. Let's pause at number 1 first. I'll wait for a little bit. I'm going to mute for a little bit. Give me an answer. You know, I'll give you about 1 minute. Think about it. What are you going to do? What are you going to be trading? What are you going to be avoiding to trade, right? What should you trade? What shouldn't you be trading? That's a question for number 1. You know, feel free to give me the answer. All right. Thanks for the answer. Someone gave the answer. Trade the US dollar pairs. We talked about it just now, right? Surprise rate hike from the Fed is immediately going to impact the US dollar. So anything that's US dollar related, trade those. Don't trade the cross currencies like Euro pound, Euro yen, Aussie pound, you know, Euro AUD. You don't trade those. As the FOMC is a surprise rate hike from the Fed, obviously the US is going to move. That's the one that's going to cause that spike. It's not on the currency crosses, right? Okay, right. Question number 2. The NFA report is going to be due in 10 minutes. What kind of pending orders are you going to be placing and where, right? This is, you know, if you have attended a previous session, you know what we do. NFA report is coming out in 10 minutes. What are you going to be doing? What pending orders are you going to be using, right? Where are you going to be placing them? All right, I'll give you guys a minute. Answer it. I don't need to give you guys a minute. Someone already answered that, right? Number 2 is stop orders. Correct. You do the buy stop and the sell stop only in a condition where the market consolidates. If there's no consolidation, if there's no range of volatility, do not trade it. Simple as that. Okay? All right. Number 3, price breaks below a major support level right after CPI release. Would you use a sell stop or are you going to do a sell limit? And give me a reason. Because I can tell you right now, both have their merits, but one is the one that is likely going to be the better strategy and limit a lot of your risk. All right, someone please answer me. Is it going to be the sell stop or is it going to be the sell limit? And give me the reason why you do that. Okay. Albert answered usually stop orders. The answer to that is actually not correct. Let me give you a little bit of an explanation. If price has already broken a support level right after CPI release, it means it has gone down significantly. If you use the sell stop before the news is released, then yeah, you'll be good. You'll be in that position. But if price breaks that level and you don't have a position, the one that you want to be using is the sell limit. Why? Because when a major support level is broken, by logic, it needs to be tested as a resistance, and the sell limit is the much better choice. Very simple answer, right? All right. There we go. Adetunji just answered that. It's sell limit to avoid the spikes. Correct. You avoid the spikes, you avoid the slippage, you avoid the crazy spread. You know, price has broken that support. You be patient. Wait for it to pull back up. Remember, any major support and resistance that was broken typically needs to be retested. Therefore, it will be a magnet. Price will pull back towards that level, and that's where you use the sell limit. That's the strategy. We trade smart. Okay? We don't trade aggressively but dumb. We want to be smart. We want to be patient. Right? We want to let other people take the fall. Don't you be that guy that takes the fall. All right? Simple as that. Number one, though, trades I would trade, I don't know what to avoid. You avoid anything that doesn't have the US dollar, the cross currencies. That's the answer to number one. All right, bonus round. Can you name all 4 types of pending orders and match them to their most ideal news scenarios? Usually I ask you, what have you learned? What do you know? Nowadays, I'm going to go move forward so that you really understand. You know, when are you going to use them? When are you going to use them? Which is the ideal news scenarios that you want to use? You know, is it going to be the stop orders for a breakout if the market consolidates? Yes. You know, is it going to be a limit order after that breakout? Yes. You know what news to use? Limit orders. Typically, you do that after you see a fade in the NFP. CPI, you know, you can use both if you want to. FOMC interest rate decision, that one's a little bit of a wild card, but you know, we typically look at limit orders for, you know, those kind of news because there's typically a lot of confusion, and also if you don't know, you know, interest rate decision is usually followed by a press conference that happens 30 minutes or 45 minutes. Usually it's 30 minutes. The ECB, the Bank of England, the FOMC, you know, they release a statement first. Are they cutting? Are they not cutting? You know, market react to it. 30 minutes later, they do the press conference. Things can come back, test support and resistance. You know, that's why you use the limit orders. Okay. All right. So that's the old call. I haven't updated, but yeah, if you wanna. If you want to see the code again, it's this one here. It's not from 2025. So feel free to jot it down. Use the code if you want to. Save it when you need to. All right, that's the code, not from 2025. All right. So, any questions? We got about a minute. I don't have a lot of time, but we got a minute. You know, if you have any last questions regarding news trading, please, regarding news trading, don't throw me trick questions. You know. Albert likes to throw trick questions, trying to get me to look into the market and give him an analysis on what's going on in the market. We're not doing live trading sessions here. This is purely educational. But yeah, if you have any questions regarding the stuff that we talk about tonight, you know, feel free. No? No questions? All right, if you don't have any questions, we are about on time with the close. What's next? We're going to be trading our CPI numbers. That's going to be on the 13th of May, 2025. 13th of May 2025 is going to be on a Tuesday. Same time, same place, same channel. Subscribe, like, click that notification icon so you don't miss that live CPI trades that we are going to be doing on Wednesday. Tuesday next week on the 13th. We'll cover the basics, we'll cover the theory, I'll give you the context, and I'll give you a couple of scenarios before we trade it, and obviously we'll see what we can do, right? Hopefully we do get a straddle there, make things a lot easier, but you know, unfortunately with how crazy the market is and the circus rolling into town right now, We got to shake things up a little bit. We got to change our strategies. Simple as that, right? We typically we're probably going to be looking at limit orders more or less. Next Tuesday, I think that's likely the scenario that's going to happen. All right. All right, guys, let's wrap it up for tonight. And I do apologize about the camera issues here, but you'll be seeing my face next week. Camera should be back, before the weekend, hopefully tomorrow. And yeah, we'll go through our usual, programming. Other than that, good luck with your trades for this week. And, I'll see you next week. All right? Stay safe. Have a good weekend ahead.